Well, good morning. I'm Dan Turner, and I'm talking to you from Pepe'ekeo, Hawaii, on the east coast of the Big Island. Let's talk about the home equity line of credit that comes with the reverse mortgage. You can look at the scenery. I'll pan a little bit for you, and then I'm going to subversively and subliminally plant ideas in your mind. What can you do with this? It's remarkable. Many of you are dealing with elderly clients, and sometimes they fall into the circumstance of Medicaid spend down. If you set up a reverse mortgage at age 62 and you turn up the interest rate as high as you can without damaging the values, then you can build up a huge amount of debt. Now, most of you are kind of taught that's not a good deal because it eats all your equity, right? Well, not exactly. It builds up a protection buffer you can use later on in life. The case in point is, let's say you've got a client with $500,000 in invested assets, and you have a nice home. You turn up the debt, pay off the first mortgage, and in 15 years, they're now 77 years old, and one of them needs long-term care. Under the former solution, you spend all their money until they're broke, and then if they recover, they're broke. With a reverse, the home equity line of credit accepts deposits just as you would think of a payment. So you liquidate the account, pay down the debt, don't pay it off, pay it down, and that pays mortgage interest, first of all. But second of all, it reduces the debt dollar for dollar. So now you take that $500,000 and pay that mortgage debt from, say, $550,000 down to $50,000, and you will immediately have a $500,000 line of credit. They can use that any way they want. Medicaid will allow you to make mortgage payments, so this is entirely within the legal structures of Medicaid rules. Once the ill spouse passes on or recovers, you simply repatriate the assets from the line of credit back to the appropriate investments and continue on with the life of the second spouse. But they don't have to go broke to qualify. That's kind of the point. It's ability to protect assets. That's all I got for you today. Hope you enjoyed the view. I'm Dan Turner, Geneva Financial, NMLS 1016716, and I'll talk with you soon.